I think the rest of the world is losing faith and confidence, unfortunately, in the dollar. And all that means is that it's losing faith and confidence in the leadership of the United States. Yes, maybe the current administration is doing what it wants and it has a long-term objective, but the uncertainty is great, and that doesn't help the dollar remain the major reserve currency, I think, because it's very unstable and people don't know what's happening one day from today or a week. Things change very quickly. Friday, June 27th, 2025, Maneco 64, home of alternative economics and contrarian views. So it looks like the dollar is on the back foot. We're going to look at the dollar and the dollar index. We're going to look at all the other currencies, of course, gold and silver as well. Before I start, though, I just wanted to let you know that the Rudy Collection, which is basically merchandise for the channel, that's up and running. So the link to the store is below in the description. And many of you have asked in the past about merchandise for the channel. We used to do merchandise through the Teespring store, but the quality got so bad that I just stopped doing it. And I'd like to thank one of the viewers. This is a real community project, so to speak. Karen from Florida, she's had the idea. She built it all up. We've been coordinating for the last few weeks, trying to get it ready. I got some samples, and I can reassure you that the quality is good. So there you go. Check out the Rudy Collection below in the description. So one thing I want to say right off the bat about the dollar is that it's just another fiat currency, just like the others. And despite that, it's actually probably the strongest of them all. Yeah, it sounds counterintuitive, but it's still the one that sovereign countries and institutions, fund managers, and people still think in dollars, people still hold a lot of dollars. Of course, that is changing with de-dollarization, especially in the non-Western world. And I think that's only going to accelerate. And of course, gold is going to be the major beneficiary, even though the euro and the yuan will also be beneficiaries. But those two are also fiat currencies. I would say that in Europe, it's ironic that we're being told that the euro is strong because they're going to increase fiscal spending to beef up the military. But I can tell you in the long term, that's just as bad. That's what the United States been doing for the last 25 years with their never-ending conflicts in the Middle East. Yeah, all that it's helped is the military-industrial complex. And the same thing is going to happen in Europe. So don't be fooled into thinking that the way to protect yourself against dollar weakness is through having other fiat currencies. And that's where I'm going to come now to the dollar index. Because the dollar index is a basket, of course, of the euro, the Japanese yen, the British pound, Australian dollars, Canadian dollars, Swiss francs, some of the Scandinavian currencies. And it's been around since 1973. It was started trading at 100. So right now, as I speak to you, it's 7:25 a.m. London time. We're at 97.29. So since 1973, if you think about it, it hasn't really gone anywhere, slightly lower. But gold, on the other hand, has gone from around 85, yes, $85 to just around 3,300 right now. But a little more on the dollar index. As you can see by this chart here, it's teetering on the edge. And why do I say that? Well, you can see the channel that's been upward since really the beginning, since the end of the great financial crisis in 2008, 2011. There's a little red circle there that I drew, and that's the low, all-time low. It's around 70.69, and I remember that day really well. I was very active, of course, in the markets. At that time, I worked for a major broker in London, Ment Financial, as a futures and options broker in the government bond market and interest rate market. But at the time already, I was personally acquiring gold. I was following gold very closely as well. And that day that the dollar bottomed, I still remember it. It was in March. I don't remember the exact date, but it was the same day that JP Morgan had to bail out, with the help of the New York Fed, Bear Stearns. Remember that investment bank, Bear Stearns? And so that day the dollar bottomed and gold topped at 1,030 or thereabouts. And despite that, the dollar's been going up versus these major currencies, as you can see, and gold's been going up. So I wanted to also let people know, people that are not dollar-based, people that think in euros or pounds or other currencies, that what's going on right now, the fact that gold is going down quite sharply versus these major currencies, I wouldn't worry about it, because it's just short-term noise. I guess in nature, things are not perfect. Like in winter, you can have a very warm day. I remember many years in Switzerland, in winter, there's no snow. And yes, you were walking around with a t-shirt, and vice versa. In the summer, here, especially here in England, you can have very cold days. So the long-term season, in my opinion, is still for lower fiat currencies and higher gold, silver, and commodity prices. And I'm going to come to commodities in a minute, because that's also related to gold. But anyway, the amazing thing about this dollar index move, and it's only amazing because we've been told that the dollar and gold move inversely to each other, but as this chart shows, it's not true, maybe in the short term. The amazing thing is that if we break, and I say if because this is a monthly chart, and by, let's say, next Monday, the last day of the month, last day of the quarter, last day of the first half of the year, we could see the dollar very easily rebound back up, let's say above 98 or even 99. Things can move quickly in the markets, but if we stay below what it seems to me, the key level, which is 97.50 here, things could get rocky for the dollar. And it's not just the dollar that's going to suffer. It's the whole world's financial system, even in other currencies. And why is that? Well, hopefully many of you by now know that the current monetary regime or system, if you want to call it, it's not really a system, because President Nixon wrecked the system in '71 and nothing really replaced it. It's nothing official. Well, yeah, it's the current system is a derivation of the old Bretton Woods system. And all the other fiat currencies are a derivative of the dollar. And that's why The UK, unfortunately, has loads of, it's now #2 in terms of dollar reserves. Japan as well, and many other countries, that's their biggest reserve in terms of foreign exchange. So it's just like you, if you're holding a stock or you're holding a bond and the price starts dropping, it's bad for you, right? So it's going to be bad for these countries as well. So the fact that their currencies are going up is not really a good thing. And I think gold is the ultimate ruler that tells you what every asset is doing in real terms. And that's why I expect gold to accelerate again and go up a lot more, or the fiat currencies go down a lot more. And the thing is, since 0809, since this channel began, gold's been going up and the dollar's been going up. Can you imagine if this trend in the dollar, higher channel in the dollar, reverses and the dollar actually starts going down? Well, even though I said the relationship is not that close, I would argue that that would put an even bigger rocket up the price of gold and all other commodities as well. So that's how I see things. And why is this happening fundamentally? Well, there's many reasons. De-dollarization, the fact that the US for over 10 years has been using the dollar as a political weapon, all the uncertainties surrounding the trade dispute, trade wars or tariff wars. And I saw yesterday that the Secretary of the Treasury, Bessent, he's asked Congress now to remove Section 899 from the big, beautiful tax bill. What's Section 899? Well, this section seeks to impose a progressive tax burden of up to 20% on U.S. income earned from foreign entities and individuals. So it's interesting that he came out with that comment yesterday. I'm sure he's watching the dollar. Is it too late? I think it is. Why is it too late? Because I think the rest of the world is losing faith and confidence, unfortunately, in the dollar. And all that means is that it's losing faith and confidence in the leadership of the United States. Yes, maybe the current administration is doing what it wants and it has a long-term objective, but the uncertainty is great, and that doesn't help the dollar remain the major reserve currency, I think, because it's very unstable and people don't know what's happening one day from today or a week. Things change very quickly. So what about the other commodities? Well, I've noticed that silver, of course, I don't have to tell you that. Silver's been doing very well. We're approaching 37. I've seen that copper, that's back above $5. Platinum is going ballistic. Palladium and other commodities are doing really well too. And I think that's because they've lagged gold behind. And now with the weaker dollar, that's going to help commodities too. I think that's going to push commodities even higher. And why is that? Well, that's because commodity producers, yeah, they're not stupid. They won't take the same amount of depreciating dollars for the same amount of commodities that they sell you. So they will demand higher prices. That's how it works. And the other thing that I spoke about the other day was about the melt up or the crack up boom, that the NASDAQ 100 closed at an all-time high. Well, yesterday the S&P 500 closed at an all-time high. So that's another sign that people are moving away from the dollar and that they could also move into stocks, because even though stocks are volatile and many people are expecting a big correction, who knows? We're in such unprecedented times that you never know. If the dollar continues to lose value precipitously, people will move away from the dollar, not just to gold, silver, and commodities, but also to real companies. And we know from history that happened in Germany in the 1920s. A lot of money went into companies that produce real things in Germany, even though the Reichsmark collapsed. Even in Venezuela some years ago, when they had their hyperinflation, the index in Caracas was going through the roof. I remember in Brazil in the 80s and 90s, when we had a lot of inflation and even hyperinflation, the stock market was a good place to be. So I'm not saying I'm 100% sure we're going to have a melt up, but it looks like one. But who knows? Very uncertain times. And what else in terms of the dollar? Yeah, I don't think it helps. As I said, all this changing of policy, like Trump froze the tariffs until July 9th. They're supposed to be unfrozen now. What's going to happen? Well, I saw a headline yesterday to the effect that they might keep it frozen. So again, they lose credibility with that. The other point I would say that's weighing on the dollar is all the speculation to do with the new head of the Fed, or Fed chairman or chairwoman, whatever you want to call it. The fact that the administration, President Trump, is trying to influence the Fed. And the Fed, by the way, is an institution that I think shouldn't exist. I'm not defending it, but because it hasn't really kept the purchasing power of the dollar by any stretch of the imagination. We're down 99% in terms of gold since 1913. We're down 91% in terms of gold since the year 2000. But be as it may, the mainstream and Wall Street and investors, they think that's a bad thing, that Trump is trying to tell Powell what to do. Am I saying I agree with that? No, I'm just trying to analyze things. And that doesn't help the dollar either. Foreigners don't like that. And we've seen lately that Germany and Italy, there's a campaign, a public campaign to bring back $250 billion of physical gold from the New York Fed. And it's because of that. That doesn't help things at all. So there you go. We're going to keep an eye on the dollar, but I don't think it's good. And it's going to affect the whole world. And it could create a lot of volatility. And it's a simple thing. The less your currency is worth against other currencies or against real goods, commodities, the less you're going to buy. That is the definition of inflation. And I think it could also be a way for the current administration to write off the debt. Yeah, without being too blatant about it. Yeah, you keep saying we're for a strong dollar while the dollar drops, right? But all that means is that the debt becomes worth less. Yeah, and it makes it easier for you to pay off the debt. The flip side is that investors get robbed blind. So even bonds, even if bond prices stay stable or go up slightly, long-term treasuries, if the dollar goes down quicker than these bonds go up, you're losing purchasing power there too. So again, I think the best place to be, that's my opinion, is still gold and silver, hard assets. They're or commodities, they're starting to catch up. So there you go. Yeah, Clive couldn't make it today. Yes, he'll be back in the future. There's nothing wrong. And with that, I'm going to wish you all a very good day. Take care. Bye.